in your 40s or 50s but don't have retirement savings, or whatever you have is small enough and you suspect that it might not serve you well, then this video is for you. And this is a situation that many people find themselves in. And for one reason or the other, you are in 40s or in your 50s, and when you look at your finances honestly, you realize that something is uncomfortable. Why? Because you don't really have retirement savings. Or if you have, it's so small that in your projection, it cannot serve you well. And people find themselves in this situation for various reasons. Life might just have happened, or school fees. You've been paying school fees for quite some time, or family responsibilities, business losses, medical emergencies, or simply years just passed faster than expected, and you didn't plan well in your 30s. Now, retirement is approaching, and suddenly the question becomes, what do I do now? So, the worst thing you can potentially do in this situation is either panic or do completely nothing, because panicking will lead you to making bad decisions. So, and the truth that many financial educators will never tell you is that if you start late, you can not rely on traditional savings and investings alone. Those ones alone will not help you. You simply don't have enough time for slow compounding. You need to hit the ground running, and you need to do faster. And in this situation, you need leverage. And what do you leverage? You need to leverage your skills, your knowledge, your networks, and your income creation process. So in this video, I'm going to show you practical recovery plan. 7 steps that if you find yourself in this situation, do the following. Particular steps that someone in their 40s or 50s can follow immediately to start building retirement security as fast as they possibly can. Step number 1, calculate your financial survival number. Calculate the number that you need on a monthly basis. Before doing anything, you need to be very clear. When you're talking about money, we need to be very clear that how much money do you actually need. Ask yourself one simple question, and this is the question: how much does it cost to run my life every single month? I'm not talking about ideal life. I'm talking about the essentials: housing, food, transport, healthcare, utilities, basic family support. And let's say you reach a number, maybe 50,000 or 88,000 per month. That means that your financial mission now becomes very clear, because the number that you're going to work for is very clear. We are working for 80,000 and not some ambiguous number. So we've set our goal, our monthly income target. And now once you know this particular number, the problem becomes strategic and not an emotional number. Why? Because we have the number that we are working for. So it's easier for us to look for a particular amount of money because we know what we are looking for. That's why I'm saying it's strategic. And now, once you know this number, the next step becomes very, very essential. So step number 2, identify your highest value skills. I presume that you've got a set of skills, and most people, what they do is that they underestimate the value of their skills. They underestimate their professional knowledge. After 20, 30, or 35 years of working, you possess something very powerful, something unique that the younger generation do not have. You possess experience, and experience can often be monetized faster than capital. Ask yourself these 3 important questions that will determine what we're going to do next. Question number 1, what problems do people regularly ask you to solve? Question number 2, what knowledge do you have that the younger professionals lack? Question number 3, what skills have you repeatedly used over the last 20 years? These 3 questions will set pace on how you're going to monetize your skills. And any skills could fit in this. This could be teaching skills, it could be accounting, it could be construction knowledge, it could be plumbing, it could be procurement, it could be agriculture, it could be logistic, sales, management, secretary, any of them. And the goal is not to start a random business that you don't know how to run. The goal is to commercialize expertise that you already possess. And this will dramatically increase your probability of success. Understanding the skills that you have is very important. But the next step will be a game changer. So step number 3 is converting your skills into a small service business. And the reason behind this is for you to have income immediately. The fastest business to start, if you are in your later years in life, are service-based business. Why? Because service-based business require very little capital. An example, if a teacher offering exam preparation programs, an accountant offering tax advisory to businesses, a construction professional offering project supervision. Name them, there are so many. These are businesses that you can start with 0.00 capital, but they can produce significant income on a very fast rate. And that income becomes the engine for your retirement recovery. Now, the next step is going to blow your mind. Use the 5x income rule. I'll repeat. Step number 4, use the 5x income rule. And this is the principle that is used in many consulting and business institutions, that if you want financial stability quickly, your goal should be to create income 5 times faster than how savings do. For example, if someone is saving 10,000 per month consistently on a monthly basis, a business can scale very fast. You can have a service business and you charge a client 100,000. You realize that you'll be 10 times better faster than someone who is only saving 10,000 per month, because businesses income scales faster than savings will ever do. So you set up your service business, and this will enable to give you income expansion. Step number 5, build 2 additional income streams. Now, because you put up 1 income stream, it sounds good. 2 will be a bit better, but when you reach 3, they create security. They create a sense of security. And the mistake that many people do is to stick around on 1 income stream once it starts working, or sticking around on 1 salary. Instead, aim for 3 categories of income. We have got active income, like where you are working or consulting on a daily basis. We have got semi-active income, having a small business on the side, and we also have got passive income, and this can come in form of investments, rental income, investing in rates, investing in bonds, or dividends when you buy shares in a particular company. At this point, understand that even small income addition will skyrocket your earnings to higher levels, because retirement stability always comes from diversification of income. Step number 6, aggressively eliminate debt. Debt is one of the biggest enemies in your later retirement, when you are setting up yourself for retirement, because the interest works against you, but you want everything to work for you when you're working towards retirement. So if you are starting late, every single shilling that is in your possession should and must work for you. So prioritize eliminating debts. And there are different debt elimination methods. We've talked about them. We've got avalanche, then we've got the snowball. Look for one that suits you well and eliminate consumer debt, eliminate high interest debts, eliminate expensive car loans, because the faster you remove the debt, the faster your income can be redirected into wealth building. Step number 7, the last step, convert income into assets, and not just assets, but income producing assets. Once your new income stream starts, the next step is very key, is critical. Do not inflate your lifestyle. Do not have lifestyle inflation. Instead, convert any surplus income into assets that consistently generate cash flow, because retirement runs on cash flow. And some of these investments, we have talked about them: dividend paying investments, rental property, treasury bonds, equity investments, can be small businesses. The goal is simple, that your assets should gradually be producing monthly income. The assets should be giving you cash flow, and that income eventually replaces your salary once you start approaching 50s or 60s. So As I conclude, if you are in your 40s or 50s and you feel financially behind, remember something very important. You are not starting from zero. You are starting from experience. You have got experience, you have got knowledge, you have got networks, you've got decades of learning, and those things are very powerful forms of capital. So the key is shifting your energy so that instead of relying on slow savings and compounding, which you don't have time, you focus on income leverage, you focus on skills and knowledge leverage, you focus on business creation, and finally focus on multiple streams of income. Because the real goal of retirement planning is not simply to accumulate money, is creating a life where income continues to pay you, income continues to come in even when you stop working full time. And that journey can just begin now, the moment you watch this video. That's the lesson for today of the video, and I'll be seeing you in the next video. Bye bye for now.